Hey everybody, good morning. It's about 8:30 in the morning on the 26th of August, 2021. I'd like to do an update on Bitcoin. I also want to do an update on Cardano. So those are the two that I'm going to focus on today. If you're interested in my S&P analysis, take a look. I think it was yesterday morning. That bias really hasn't changed. So what I want to focus on today, again, is Bitcoin and Cardano specifically, because Cardano has some stuff that's going to be going on at the beginning of next month, so I want to try and prepare everyone for that. Before I get into any of this, of course, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. I'm just giving my opinion on the market. So let's go ahead and see if we can get into the charts. All right. So before we get into this, I'm going to prefix this by saying that Bitcoin, in my opinion, has the ability to outpace inflation long term. So we're talking the next maybe 5 to 10 years. What happens after that, things are probably going to be a little fuzzy. But I do think that Bitcoin is the new gold. And we've been saying this for a long time now. And I also think that it's a safe haven, long term, right? So a lot of times what we talk about here, we talk about high frequency trading. We talk about taking leverage trades and this and that. But, everybody should have some Bitcoin in a wallet, in my opinion. Now, is this a good place to go ahead and place those buys? I mean, no. The best place to be placing those buys this year was around $30,000. And so, I mean, it is what it is. We're up here now. We broke 50,000 a couple days ago, and now we're starting to see signs of exhaustion. So I want to talk about this. I've got this wave 4 here, and if I go to a higher time frame, a lot of things are going to look a little funny, but you can see where I've got the 3 here, my orange 3, and my orange 4 down here, and that's not to say that this is actually going to be it, right? So if we zoom out, we've got, basically, we've got this impulse from all the way back here, this 1 and this 2, and then, of course, us putting in that potential 3 all the way up here, and then going in for the 4. Now, how long did it take for us to do, how long did it take for us to do wave 2? Well, let's just talk about that a little bit here, because this is somewhat important. I want to talk about a couple different things with this correction specifically. So let me see if I can, kind of estimate from the high to the low. Let's do date and price range. So we're going to start up here at the high. We're going to go all the way down to the low. How long did this correction take? Well, it took 261 days, and it was a 70, we'll call it a 71% drop. That's a very significant drop. Right? So, from Fibonacci terms, 716, that's not a fib number. We have a 786, we have a 618. But a lot of times what we'll see, and of course there was a lot of overthrow on this move. The 618 would have been a decent place to be placing buys. That would have put you in right around 5,000. And of course we know where we are now. But again, and I'd forgotten. So we're talking about 260 days. So let's just keep that in mind. 260 days it took for this complex correction to complete. How long have we been working inside of this correction? Let me go to a 2-hour time frame so things don't look quite as bad. How long did it take for us to get from this high here in April to the low down here? All right, so let's just try and do this. Pull this back. 70 days. All right, so we're talking a 260-day correction it took from June of 2019 to March of 2020. 260 days. And we're saying that only 70 days in this correction? I don't think so. I think there is going to be another flush. Again, I have the same sentiment with the general equities market as well. I think there's going to be another flush. And so, no, I'm not saying that we're going to have 260 days here. There's something in the trading world that's referred to as alternation, where, you've got cycles. That first cycle went down like 72%, and it took 260 days. Deep correction, long correction. So I would kind of expect this correction to not last as long and not go 71%. right? So I don't believe it'll go as deep. Okay, so let's just kind of keep that in mind as well. I want to take a look at this in terms of how high we have gone compared to the high and the low, the dominant pivot high, the dominant pivot low. Let me get a cleaner chart here. Okay, so I'm on log scale. I'm going to get off of log scale. All right, so again, I've been talking about this area up here for a while. Do I think that we bounce? I mean, it's possible that we bounce and we make a new high here. If we do, we've got a contender for an ending diagonal. I really do think that we've got a contender for an ending diagonal. You know, I'm looking here at the 618 here at 51,100. I mean, we had a front run right here. I think we can all agree we had a bit of a front run on this 618 up here. At the same time, you know, when we had that price action up there, we had the 1 hour, the 3 hour, and the 12 hour all in overbought conditions at the same time. I'm not seeing any significant signs of bearish divergence on the 12 hour. Don't see any significant signs of that. Now, I'll tell you one thing that we did in the server just a little bit ago. When we were at the lows of this candle here, it was at about 46,350. I was discussing. You know, it's like, you know, we're probably going to get an opportunity to have a long trade, and you know, ultimately right now I'm really only targeting like maybe 48.5. If we can blow through 48.5, and let me talk about why 48.5 is so important. There's a couple of reasons why. One, we have some signs of support here, a little bit of resistance here. We tried to push up. We tried to reclaim that as support, but we failed. Okay, so that level is pretty important. If we can get up and over 48.5, and really the important level for me now is we're going to call it 49,400. It's going to be about right there. So this area is an area of consolidation. If we can get inside of here and consolidate and ultimately break up above 49.5, 49.4 rather, yeah, I do think that we can find ourselves up here at this 51 level, maybe 52. Maybe we get a deep move here into the 52 range, but that's going to get really tough. So we've got the 12 hour that's currently pointing down. We've got the 1 hour. Let me go down to a 1 hour time frame here, and I'm going to talk a little bit about why we took the trade that we did. Okay, so first off, we've got, you know, an ending of a correction here. We think we can all agree this is ending of a correction, so this is a dominant pivot for me. Obviously, this is a dominant pivot as well because we've got this area of consolidation that we ended up breaking down, and this was the high. All right, so the reason why we took the trade on a fib retracement, we've got, let me get it perfect here, dominant pivot low. I'm going to try and get this as close as I can up here, dominant pivot high, and we hit that 618 and we bounced right off of it. Now, I said at the time, this is a high-risk trade down at 49, it was at 49,350, so I was there on log scale. 49,350 on log scale, that is the area that we were talking about going long. We've got the 1 hour that was curling up. Okay, that's another reason why I had, a little more confidence, but I still determined that it was a high-risk trade because of this 12 hour. So this 12 hour is still moving down, and it doesn't show signs of stopping anytime soon. It's still pointing down. So that, honestly, that does have me concerned a little bit short term. Which is why I refer to this as a higher risk trade, which is why I've also was only targeting 48.5. Let me go back and just make sure that I'm saying this right. I was targeting 48.4. So 48.4, 48.5, this general area is where I believe we're going to have some significant resistance, and I think it's going to be tough getting through there. Now, taking a trade from 46.350 to 48.4, I mean, that is a $2,000 trade. So not terrible return, even if you're doing like 2 or 3x leverage. But it's still higher risk. It's still higher risk. Now, if we can get back up above this level again that I was just referring to at about 49.4, well, then things look a little bit better. Then it looks like we are probably creating a dominant pivot low down here. Now, it wouldn't surprise me one bit to come back down here to 46,350. That kind of stuff happens all the time. Probably to raid the lows. We may go as low as 46 before we start moving higher. Now, in my opinion, if we do something a little bit like this, where we're up here and we start to do something like this, and then we go down, this, if it does this, in my opinion, this is going to be a fake out, and then I think we do actually go higher to that 51 level. Okay, so that's something to kind of keep in mind. That's something to pay attention to. Because if we consolidate for a little bit, that's going to give time for this 12-hour to reset. It's going to give time for this 3-hour to reset, and likely this hour will go up and then come right back down. So if all of these get reset, then I think this is good. So back here, we had the 1 hour and the 3 hour both in oversold at the same time, but that 12-hour was pointing down. So not a lot of confidence in that trade. Now here, I mean, this 12-hour was, you know, it was pretty low. The 1 hour and the 3 hour were down there, and the correction looked like it was finished. So, so this was a decent trade area as well. But let's talk a little bit about what's the most concerning thing that I see on the Bitcoin chart right now. All right, so if I zoom in here, we've got a couple trend lines that I want to pay attention to. So I'm going to try and clean this up so that we can watch this. So again, I'm on a log scale. I can go on linear scale and pay attention to this right here. Potentially a bearish throwback in the works, because we've got a low here, we've got a low here, we've got a low here, and now we do have a low right here, but we broke through. All right, so unless we can reclaim this, you know, again, very similar to what I was just saying, if we can get back up above this, that's going to get back up above the trend line. Maybe we come back down here for a retest. That would be healthy. That would be healthy, a way for us to get up there. But for right now, I mean, this really doesn't look fantastic right now. This does not look fantastic. Would I take a short? I mean, I think a higher probability trade would be to go short, but you're going to have a pretty wide stop loss. Because again, the possibility that we do get up here to the 51, 52 level, I mean, that's still pretty possible as well. But I think the probability is, unless we can reclaim this, that's likely not going to happen. We got to reclaim it. Now, if you want to take a short here, you certainly can, but I would get out of it if we did reclaim this trend line on a 4-hour time frame. On a 4-hour time frame, okay? On a 4-hour time frame. That means that you're going to have to sit and wait to confirm that candle, right? So we talk about candle confirmation quite a bit. Just because it kind of peeks through it does not mean that it's going to break through that particular trend line. You got to wait, because it can wick through it. That does not mean that it broke through and it's going to hold, right? You have to wait for that 4-hour candle to close before you take any action on any trade that you're in. So that's just my opinion, of course. That's just my opinion. But this is what I see. I see a nice strong trend line with 3 support zones. You know, again, we can also take this on the flip side, where we've got this up here as well, right? So I would not say that we are contracting here. Let me just pull this back. Whoops. Let me pull this back over here and see if we've got any more confluence with these uppers. So potentially, the only reason I don't like the geometry on this is because we've got this big open area up here. But the fact of the matter is, we've broken down below. So yeah, we're taking a long trade based on the fact that it's pulling back to that 618, and it pulled back pretty cleanly and it bounced off of it pretty well. So that trade is still okay for right now. Again, if we just consolidate here and we don't break up above this in the next, I don't know, 12 hours, then I would say that more than likely we should probably exit that trade and we should look for shorts. So that's just my opinion on this. So let's talk a little bit about Cardano. So in Cardano, so that's 15 minutes and now we're talking about Cardano. On Cardano, what I think that we've got going on here, let me go back to a log scale, right? So I've got this wave 3. At the time I said we were going to go to 250. We didn't get there. We got to 246. I was frustrated when this happened because I honestly was expecting Cardano to get to 250 because the algo target was 251. So I set my sell orders at 250 and didn't get filled. And it is what it is. That's what happens sometimes with trading, and you just have to kind of take it with a grain of salt. Longer term, right? I say longer term because I do think Cardano is going to have somewhat of a more steep correction from what it's currently had. Currently trading at 257, was as high as almost $3. Something that I am not going to rule out is the fact that this could be the wave 3 and we could be in the wave 4 right now. Okay, so let's just talk about this. And again, all the videos that I do are live. Everything that I do is in real time. I don't prep anything ahead of time, and I do that for a number of different reasons. One, for being just genuine, so that you can see how I think when I'm going through this. I think this is a valid correction. Then I think that we've got the 1, 2, 3, potentially going to find ourselves up here at about the $3 level. I think it's very possible Cardano goes up to 3 to maybe 335, maybe even goes a little bit higher. But longer term, I mean, price targets for Cardano, again, I'm on log scale, but for Cardano to go to $21, $22 is a very, very possible thing. And again, we're probably not talking this year. I'm thinking more along the lines of within the next 5 to 10 years. Now, when I say within the next 5 to 10 years, well, sure, it could happen this year. It could happen by December. We've seen crazier things happen in this space. It could happen next year. It could happen the next year after that. The timing is what gets people every single time. Timing a trade, and I get caught in trades all the time where I time them incorrectly. I mean, that kind of stuff happens. I think we can all look back. If you're on the Insured Plus on the Discord server, you know that we had a Google trade that I was looking for new highs on Google. And I was early on it, and that kind of stuff does happen. It does happen. But at any rate, I do think Cardano still has room up to $21 to $22. We'll call it $20, right? We're at $2.50 right now. So, in my opinion, crypto, and I've said this on the Discord server, and I'll say it to you guys, crypto has the potential to outpace inflation. It's the safe haven. It's digital safe haven. Gold is physical. You can hold on to it. A lot of boomers like it. Crypto is the basically the new gold, and it has been for a long time. Just a lot of people have just continually denied it, but it is. A lot of people say crypto is a scam. Well, altcoins are a scam, right? I have no doubt in my mind that most altcoins are a scam. They're a way for quote-unquote developers, which, of course, most of them tend to just copy and paste code from another project. But it's a way for most altcoins to just rip people off. But Bitcoin, Ethereum, Chainlink, Cardano, these types of things, especially ones that are proof of stake, which is why I now am a big fan of Ethereum. Anything that is moving to proof of stake is going to have significant upside potential in the future. I won't say in the near future. I'll just say in the future. Proof of stake has the potential for huge upside gains. Now, I say potential because nothing is guaranteed in this space. So let that be my disclaimer. There is potential. There is no guarantees. But proof of stake is where the future is. And the reason why I say that is because more and more people are becoming environmentally conscious. More and more people are doing things like buying electric cars. They are trying to be carbon neutral. They're going solar. There's wind power. All of these things point in the direction of being more not economically, more environmentally friendly. And Bitcoin right now is not environmentally friendly. Now, certainly there are mining facilities that do their best at becoming environmentally carbon friendly, carbon neutral, environmentally friendly, but there is more that are not. And that I think is going to be detrimental to the crypto space. Anything that is based on energy mining is going to have limited future. I do think that Bitcoin is an exception because the network, generally speaking, is pretty sound. But I think Ethereum has more potential for percentage to the upside because of proof of stake, and I think Cardano as well. I mean, shoot, looking at Cardano right now, percentage to the upside from where we're currently at right now, if you have patience, that's still 800%. Again, no guarantees. No guarantees that that is going to happen. But that target is sitting there. And we talked about this on Chainlink several months ago, where we had a projection like this, and we're down here at 7 cents. And again, if I would have told you that target was at 250 to 335, you would probably laugh at me for something that cost 7 cents. Well, now I'm telling you that that last target to the upside is sitting there at $20 to $22. Well, it's an 800% to the upside. Now again, when we were at 7 cents, this was in September of 2020. September of 2020. We are almost a year later. We're almost a year later, and we have had, let's just check it out because it's ridiculous. Right there, 3,241% to the upside from 7 cents. So, how long did it take to get there? A year. It took a year to get there. Now, what that then means is, we're likely going to enter a pretty complex correction at some point here, which could take a year. So that's why I'm saying within the next 5 to 10 years. Now, this is long-term investing that I'm referring to here. Again, not financial advice, it's just my opinion. Within the next 5 to 10 years, I think Cardano is going to hit that. And when you compare it with the rate of inflation, with the declining value of the dollar, you're going to have more buying power than you would have if you would have just stayed in cash. If you would have invested in gold. Now, I do think that gold will maintain pace with inflation, but I think major strong alts and crypto, along with other things as well, which I won't get into, are going to outpace inflation, and that's what you need to get yourself into. All right, guys. I'm going to go ahead and end it here. I've been going for 23 minutes, 15 minutes on Bitcoin, 8 minutes on Cardano. If this video did help in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. And, of course, wherever you are in the world, I hope you're having a good day, a good night, and a good evening.